Hi guys, this will be the last key for reading or for determining credit or debit. Here you can see we can using the same thing, same pictures that to show that the big picture, the accounting equation, asset equal to liability and equity. Most of the time, it's pretty straight. I want to use the last one, this one, to show that sometimes you may be confusing. Here, the most thing is related on the liability and the equity. Let's say you have an event that you are using your cash to pay your loan, right? So this could be having you could be confused. You said, so how do you count? How do I count that? Is that a reducing liability? If it's reducing liability, then it's a debit, right? Because we know that debit is left up, right down. So if we reduce the liability part as a debit, right? On the other hand, the equity. What about the equity? Reducing your liability actually increasing your equity, right? So that one, if that's the case, then it's a credit event. So let's say the event of repaying your loan is a liability or is it a debit or is it a credit? If it's in terms of reducing liability, it's a debit, definitely, right? Remember that at the left up, right down. So anything reducing liability or reducing equity will be a debit, right? On the other hand, the same paying of the loan could increase your equity. So in that case, that you're not a decrease in you're not going down. The equity is not going down, but it's going up. So that will be a credit even. So in this case, how do you determine that? Well, there's it's not really. I mean, this one on the if you're using your cash to pay your liability, then that event is clear because you are reducing your asset because cash is a part of an asset, right? So in this case, you know that the reduce taking cash out is a credit event, but the problem is that paying off the loan, is that a liability, reducing liability, which is a debit, or increasing equity, which is a credit. So the reason I use this example is that this is a pretty straight. In accounting, basically we have a two uh, impact. We always give the priority to immediate effect. Okay, so in this case, your liability is decreased right away. The minute when you pay off the loan, your liability increased. What is the increased equity? That's kind of a long story. It's not immediate, okay? Because equity depends on many things. Yeah, at the end of the day, at the end of a accounting period, your equity may be increased. Why? Because your liability is decreased. But for now, at this exact time point, what happened is two things. Number one, your asset, your cash is decreased, which is a credit event. Okay, but on the right hand side, your liability is decreased because the minute you pay off the loan, your liability is decreased. So that's a debit event. So that's how I'm just saying this is your last key to make yourself clear that whether it's counted as a debit or credit. In case you have a doubt, look at the immediate effect. Okay, that's the end of this accounting debit double entry videos.